five-fold increase in its profits, coming in at around 59 crores. Rukmini caught up with Surjeet Singh, the CEO and the MD of the company, on the impact of the FCCB conversion, what kind of impact it will have on their margins, and also what exactly are they looking at in terms of expansion going ahead. Let's hear them out.
Overall, FCCB for Subex was close to about $96 million across various tranches. And we worked over the last 6 to 9 months with all stakeholders, and now only about $7 million odd is left. Rest, everything else has been converted to equity, which frees up the entire balance sheet and cleans up the entire balance sheet. And that, to me, that was the largest overhang on the company, if you will.
In terms of margins, how do you think this is going to impact going forward in FY17?
It's huge in the sense that we don't have the interest burden on account of this, number one. Number two, we have spare capital now available to invest on growth. But operating margins, we had always stayed focused for the last 3 years. Our operating margins improved from almost 7-8% in 2012 to now closer to mid-20s, 23-25%, something like that. So I think operating margins are in the mid-20s. It eliminates the entire interest portion on the company and frees up, more importantly, opportunities for us to invest aggressively.
Also want to understand from you, in terms of geographies for FY17, what is going to be important for Subex? Where do you see bulk of the growth coming from, and also a sense of how these markets are going to play out in the next 1 year?
We are strong in Asia Pacific, Middle East, Africa. We'll continue to dominate that footprint because that's our bread and butter, so to speak. Americas is a consolidated market in North America. We have almost every operator in the big fives as our customer. We are focused heavily on Latin America, and we are also investing for growth in Europe. So all in all, I won't change our focus to stay in the strength areas that we have, but we'll expand footprint in Latin America and Europe.
Sure. Do you think that you're adequately capitalized right now, or do you see the need for more funds in the next, near term?
I think I'm actually very proud to say that the entire management team of Subex has been able to achieve what many thought was unachievable. Primarily, number one, equitizing this amount of debt, and number two, from almost a cash-strapped company in 3 years, that we are now cash flow positive, and we have almost $15 million of spare cash.
All right.